A study found in 2014, only 1 out of 100 actively managed portfolio managers beat the market. The rest fail over a 10-year period. Hi, this is Mosh. Today I'm going to be talking about passive income. What is passive income? It's income generated with little to no effort. As I'm learning more and more about the market, the passive income side is becoming more and more important because it allows me to spread my risk. As you all know, I have Trading 212 and Free Trade, where I do my long-term investing in growth stocks. And if you want a free share worth up to £100 with Free Trade or Trading 212, all you have to do is open up an account, use my link in the box below, deposit £1 and they'll give you a free share worth up to £100. A lot of my time is used up researching growth stocks, and I also do swing trading, so the technical analysis side uses up a lot of my time as well. I needed an app where I can get passive income with zero effort from my side. This is where InvestEngine comes in. It's a really great company that invests your money into different ETFs and it builds your portfolio based on your risk level. So when you first jump into the app, they'll ask you different questions and they'll assign a risk level based on your answers. Based on your risk level, they'll generate a portfolio for you that you can get passive income from. Remember, passive income is never 100% guaranteed. This company manages your portfolio for you for a really low fee of 0.25%. As I mentioned earlier, 1 out of 100 actively managed funds actually beat the market. But these guys, they're not trying to beat the market. They're trying to be the market. I like being as transparent and as open to you guys as possible. I've been in touch with InvestEngine. I actually had a meeting with the CEO, Andre, and the head of marketing, Adam. This allowed me to find out a bit more about the company and ask questions and bring it to you guys. Firstly, it was about the fees. There are no setup fees, withdrawal fees, dealing fees, or ISA fees. The only fee they have is 0.25% for managing your portfolio. Remember, they invest in ETFs, so just bear in mind those ETFs they're investing in may have fees as well. InvestEngine also do something called rebalancing. So what they'll do is they'll look at your portfolio and rebalance it. So it could be changing the weighting of different ETFs, introducing new ETFs, depends if your risk level changes or if something else changes. So you literally have to do zero work. All you're doing is putting money into it and enjoying the ride. And this is ideal for me because a lot of my time is used elsewhere. I don't want to have to think about it. Another question I pose to them is, why doesn't someone just dump all their money into a Vanguard S&P 500 ETF? Their response was, you can do that, but all your exposure is in the US markets. So if something drastic happens to the US market or the US economy, obviously that's going to affect the Vanguard S&P 500 massively because you're all invested in there. A really great thing InvestEngine are doing is they're offering you £50 if you deposit a minimum of £100 into the account using my affiliate link below. All you have to do is keep the money in there for 12 months. If you don't, you have to give that £50 bonus back. Definitely go try them out, put in £100 and they're going to give you £50 for free, which is a substantial amount. Another great thing they offer is for business accounts. I've not seen this in any other company. If you have a business and you have spare cash floating around, you can actually put that into investments. You may be asking, can you trust them? Are they safe? They are actually regulated and authorized by the Financial Conduct Authority. They're also a member of the Financial Services Compensation Scheme. So what that means is if something really bad was to happen to them or they were to go bust, you'll be compensated up to £85,000, just like the UK banks. As you can see, this is my portfolio. So I've got about 79% in stocks and the rest in bonds. And these guys show you exactly where your money is invested into. So as you can see, 17.7% is in the S&P 500, but I've got some in the FTSE 250, FTSE 100. There's some shares in Japanese companies. So the risk is really spread out. And you can see the bonds and alternatives. So they've put some money in physical gold and physical silver. So remember, this allows me to not have to worry about anything. I'm not doing any research. They're doing it all for me. They do rebalancing as well if needed. And obviously they can buy fractional shares as well. And another good thing is you can set up a direct debit. So if you want to put £50 a month in, £100 a month, it's up to you. They also have the projections. So my risk level is very high based on the questions I answered when I started the account. Passive income is always for long term. And you can see what the turnover is if I put a certain amount every month. The worst case scenario and the exceptional case scenario over the next 10-15 years. So definitely go try them out. And remember, claim your £50, use my link below. I think they're a great company and great for passive income.